In 2023, the average stock holding time for investors dropped to just 6 months. That's right, people are buying and selling stocks faster than ever before. Yet, the most successful investors, like Warren Buffett, hold their stocks for decades. So, what's the secret? It's not about chasing the latest trends or reacting to every bit of news. It's about something much quieter, focusing on yourself and staying silent. You see, value investing isn't about noise or fast gains. It's about finding long-term opportunities, ignoring the chaos around you, and trusting your own judgment. But here's the shocking part. Research shows that 90% of active traders underperform the market over time. Meanwhile, those who stay silent, avoid the hype, and focus on value investing often end up on top. In this video, I'm going to show you why tuning out the noise is the key to building wealth. You'll learn how silence, patience, and focus can turn you into a successful value investor. Stick around, because I'm about to share strategies that most people ignore, but that could make you more money in the long run. Ready to silence the distractions and start investing smarter? Let's dive in. Chapter 1. The power of silence in a noisy market. In today's market, it's hard to hear your own thoughts over the constant chatter. Every day, there's a new headline or expert voice telling you what to do. But value investing thrives in the silence. Warren Buffett, often considered the world's best investor, once said, "The stock market is a device for transferring money from the impatient to the patient." In other words, staying silent and waiting for the right opportunity is far more powerful than reacting to every bit of news. By focusing on yourself and your analysis, you can ignore the market's noise and make clearer, more thoughtful decisions. Many investors get caught up in the latest trends, but value investing is about taking a step back and recognizing true worth over time. In fact, studies show that long-term investors consistently outperform short-term traders who are constantly reacting. Value investing requires a mindset that doesn't rush to conclusions, but waits for opportunities to reveal themselves. Chapter 2. Silence your emotions. The secret weapon for value investor. Investing with emotion is like driving with the radio blasting. You're distracted and less aware of what's happening around you. This emotional turbulence often leads to impulsive decisions. One of the core principles of value investing is emotional discipline. A 2018 study by the CFA Institute found that 75% of investors' poor decisions are linked to emotions, like fear and greed. By silencing these emotional reactions, you can focus on the facts, earnings, dividends, growth potential. Buffett's famous advice is simple. Be fearful when others are greedy and greedy when others are fearful. This principle has led to some of his most successful investments. When everyone else is panicking, value investors stand firm. By quieting emotional responses, you avoid costly mistakes and make better choices based on data and reason. Chapter 3. Focus on yourself. Mastering the art of independent thinking. It's easy to get lost in a crowd, especially in the investing world, where the pressure to follow popular trends is immense. But true value investing requires independent thinking. Charlie Munger, Buffett's partner, once said, "It's not supposed to be easy. Anyone who finds it easy is stupid." The key to success is not following the herd, but rather trusting your research and investing based on your understanding. For example, when many were avoiding Amazon in its early days, Buffett saw value in the company's long-term potential. It's about focusing on what makes sense to you, not what everyone else is doing. As a value investor, you need to be okay with standing apart from the crowd. This often means ignoring the latest stock tips and doing your own deep dive into financials. Independent thinking will help you spot opportunities others miss. If you're enjoying this so far, don't forget to subscribe for more insights on value investing and how to master your financial journey. Chapter 4. Quiet persistence. The unseen work of a successful investor. Value investing is like planting a tree. It requires patience and persistence. As Buffett likes to say, our favorite holding period is forever. This mindset has led to some of the most profitable investments in history. Quiet persistence means consistently researching, evaluating, and holding onto your investments for the long haul. In fact, the average holding period of a stock in the 1950s was about 8 years. By 2020, that number dropped to around 6 months. Today, most investors chase short-term gains, but the true value investor understands the power of long-term commitment. It's not about making noise in the market or reacting to every fluctuation. It's about sticking to your plan and trusting the process. Persistence is often the key to making big returns. Keep working behind the scenes, making informed decisions without needing constant attention or validation. Chapter 5. The Sound of Value. Finding gems in a sea of noise. In a market full of distractions, the ability to focus on value is essential. This means cutting through the noise of stock tips, analyst predictions, and clickbait headlines. Legendary investor Ben Graham, the father of value investing, said, "The investor's chief problem, and even his worst enemy, is likely to be himself." Value investing is about filtering out the distractions and sticking to the fundamentals, things like earnings, growth potential, and strong management. For instance, Apple's rise wasn't predicted by many in the 1990s, but value investors who saw its potential early on made huge profits. It's about finding the gems, the undervalued companies that others overlook. Today, data suggests that investing in undervalued stocks, those trading below their intrinsic value, can generate higher returns over time. By focusing on the fundamentals, you make investment decisions based on reality, not speculation. Chapter 6. Focus on your circle of competence. Knowing your limits. The biggest mistake many investors make is stepping outside their circle of competence. Charlie Munger often stresses the importance of this idea. Knowing what you understand, and more importantly, what you don't, can prevent you from making costly errors. For instance, Warren Buffett doesn't invest in tech companies because he doesn't fully understand them. Instead, he focuses on industries and businesses where he has expertise. A study published in the Journal of Finance found that investors who stick to industries they know tend to outperform those who don't. By staying within your circle of competence, you avoid making blind bets in areas that could lead to failure. It's not about being an expert in everything, it's about knowing your strengths and sticking to them. In the world of value investing, knowing what you don't know is just as powerful as knowing what you do. If you found these strategies helpful, make sure to subscribe for more exclusive tips and strategies on becoming a successful value investor.